Hey everyone, Ben Williamson here from InvestorHub with the first installment into our capital markets school. So the first question we're asking is, what is the ASX and how does it operate? So the ASX is the Australian Securities Exchange. It came together as a result of a merger of different exchanges, and exchanges in general were established as brokers coming together in order to create a more uniformed market to make it easier to buy and sell securities. I think it's important to remember that it came together by brokers, and therefore the core of exchanges is really set up for brokers to interact with each other. Whether they used to be, obviously they used to all be direct people and full service brokers, what we'd call full service brokers today, but it's increasingly full service brokers, institutional level brokers, obviously hedge funds and the like transacting, as well as retail focused online only brokers. So that's how it all came together. I think if you look at the ASX, one thing to remember with it, and we'll cover this a bit later and how they make money, but one thing to remember is that the ASX's main client are people buying and selling stock. So it's the trading side, it's the broker side that are the main client. The companies are essentially the product that is sold, right? So that's something to keep in mind. It's not a bad thing, but that's kind of the reality. I think the other thing to really remember is that its job is essentially a delegation of responsibilities from ASIC. So all of the listing rules that you see and the like are there as an agreement between the ASX, which is a public company in itself, it's listed on its own exchange, between the ASX and ASIC to sort of police how ASIC's rules around the Corporations Act are applied to listed and publicly listed companies. And that's a good point to remember. The ASX is there to service publicly listed companies. So all public companies, whether you're listed or unlisted, and you usually trigger these things at a certain number of shareholders, all public companies have certain requirements around disclosure obligations and communication of those disclosures to their shareholders. Essentially, you're trying to keep your shareholders fully informed so that they can make decisions with regards to buying and selling of stock. Now, whether you're publicly listed or publicly unlisted, you've really got the same requirements on you. There's obviously nuance, but you've still got the same sort of requirements. The beauty of the publicly listed phase or part is that you also have a, channel in ASX disclosures and ASX announcements. You've got this channel to keep people fully informed. So by utilising that channel, you're able to fully inform the market, which is great. You satisfy all your obligations under the Corporations Act in that way, and you create more exposure to the stock so that people can buy and sell. And over the next few bits, we'll talk about why people would want to be listed. We'll talk about how do they get listed, the requirements of being listed, and also a bit more about the ASX.